Richard, negotiations between Greece and its creditors are at a standstill. It looks as if the dreaded Grexit is approaching. Surely this has got to be bad news for the banks and the end of the road for them.
It already has been. Their shares are down pretty dramatically again this week, and they're suffering from outflows. Still, outflows in the first quarter had been about 25 billion euros.
Outflows of deposits.
Yeah, outflows of deposits, so retail customers shoving it under their mattress or putting it in investment accounts, typically with foreign-owned investment houses. So lots of moving stuff going out the door, and the banks are having to plug that gap with liquidity they're getting from their central bank, with European Central Bank blessing. But these banks are now trading at 0.4 times their book value at the midpoint, and so not completely priced for disaster just yet. But yours for 10 billion, maybe on your next holiday in Greece, you could sneak one in your bag.
But if the lifeline is kept going there, then maybe they can survive. I mean, as you say, some people think there is still some equity value left in these banks. Are they completely mad, or is there still some hope for them?
We're not in the business of putting banks out of business, but there's certainly a risk that if the banks are such big holders of Greek debt, their balance sheet values are going to be plummeting the moment that there is a default. And as we were saying earlier, the default is with its creditors, it's not to the bank holders. However, it really is quite a problem to operate a banking system where deposits are going out, there's no new source of liquidity, your capital is being eroded by probably impairments, write-downs, and also there's the strong risk that consumers say, well, if Greece is doing it, I'm also going to just stop paying back my loans. And so the risk is there's a kind of moral hazard that then takes over, and the Greek banks begin to crumble.
What then is the best case scenario? Is there any way out for the banks?
There is, a 10 billion valuation, someone could come in and buy that. I can't imagine anyone wanting to, but I mean, a utility banking model may be just what's needed in Greece in the longer run. However, the real issue is for the businesses that need to operate from day to day. Now, Greece is not a huge exporter, but it is a big tourist destination, and operators of hotels need to pay travel companies, things like that. So something's got to happen, and I think, much as it's nice to set an example by pulling the plug on Greece if you're the European Union and it hasn't obeyed the rules, it doesn't help anyone just to let the country and the bank go like that. So there could be a few ructions elsewhere in the Eurozone. I think more likely that it'll be contained to Greece. Banks in Italy, Spain, Portugal have been reducing their holdings of sovereign debt, trying to break this sovereign and bank feedback loop. But I think someone might be able to go in, may want to go in, a private equity nutcase may see that there's value and make a go of it.
Or maybe down the line there is some hope for salvation. In the meantime, though, it looks like the Greek banks are right in the middle of the storm and there's very little they can do to affect its outcome. Richard, thanks very much.